And the question is, how does a stock market return compare to real estate from investment returns in the long run? Yeah. So I think the stock market return is better. I mean, the average historical return annually is about 15%. And so I think it's a better investment. And property has done well, but it's a little bit different though, because when I mention the stock market, I mean the S&P 500 or global stocks as well, the MSCI indexes. When you talk about property, it all depends on where you're based. My dad used to tell me the three most important things about real estate investing are location, location, location. Sorry, England, like that, yeah. So I think that it all depends. It all depends. But I like stocks better, although I do own a bunch of real estate as well. I like stocks better because they're liquid, meaning the stocks I invest in, mutual funds, etc. ETFs, I should say, not mutual funds, are I can get in or out of them quickly if I ever need to. And so you get kind of a liquidity trap when it comes to real estate. And because properties aren't traded as much as stocks are, the spread between the bid and the ask, meaning you want to sell it, you can sell here. You want to buy, you buy here, is quite wide. With stocks, because they're liquid, they trade like water, so to speak. That's what they say on Wall Street. The spread is smaller, okay, which means that you can sell it here, you can buy it here. And the more liquid a stock is, the more narrow that little spread is there, okay, the bid and the ask. And so I prefer stocks longer term. I do, but I do own property. And we recently, my wife and I, we bought a piece of property, a building actually, right next to the University of Western Ontario, just an hour and a half south of Toronto, in a place called London, Ontario. Because if we do go into a recession, and we will, business is always cyclical, we think that education is counter-cyclical, and more students will still want to rent that property. I hope. Knock on wood.